Hi, Richard here on Friday afternoon on the 15th of April, and this is a chart of the US dollar. We're looking at the overthrow which has occurred, this ending diagonal. Honestly, this is really the last gasp. What we're expecting to see is support off this lower line, and if we go to, that's the weekly chart, we'll go down to the daily to have a look. This is the end of the fifth wave. I wouldn't be surprised to see it push down here, possibly even overthrow, but 74 should pull it up. It really should. And the wave pattern, the count is very straightforward. 1, 2, down for 3, up 4, and then completion here for 5. Ending diagonals always finish back up where they started, so it's a terminal pattern. They are always terminal, and we'd be looking for a strong move up in the US dollar, which reciprocally would of course mean that from a euro perspective we'd see the exact opposite. And here's the chart pushing up, respecting the long-term trend lines. Here's the narrowness of the ending diagonal, same pattern, and you know, it's stalling now. We've had 1, 2, 3, 4, 5 days of pressure against this top trend line, the resistance. I wouldn't be surprised to see, in the event that the US dollar does break down that little bit further, what's left on the daily chart, that would see this push up. This is in fact a daily chart. So we've been long this market since early March. That's over a month, almost 6 weeks now. It's done nothing but go up. No signal by the market force at all. So even though there's been some waxing and waning, it's still game on. Looking at the US market, the Dow, we've got an unusual situation in the sense that we talked about this three-wave correction. This looked very faintly a three-wave, which would make it a flat correction coming up and taking out. Is it a double top? That's the big question mark. I haven't wanted to enter this trade yet because there was a lot of uncertainty with this doji here, and then this hammer formation, which is quite often, even though it's mid-pattern, is or mid-trend, is possibly a bullish situation. But I'd like to see some downward action before we make any decision to enter this. But by rights, we'd see this push up into down for 1, up for 2, and then, you know, this trend line here would be broken out as it, you know, gains strength, and then we'd see this low from the Japanese earthquake taken out below 11,462. That would certainly give us the, if it's a 5-wave C wave, it would certainly give us the confidence that in fact this thing is breaking down. So when we look at the XJO, the market there is sorry, that's back to the euro, and here's the XJO. This is the trade today. It's broken its long-term resistance. You remember we talked about this. It has pushed down. We would expect a little retest depending on what the market in the US does. We'd expect a little retest of this long-term, what was support, goes all the way back to July last year, 1, 2, 3, 4 times, and now it's broken down again. We'd expect a little retracement depending on how far it pushes down, and then the targets, which still in place at 46.30 and 44.50. So that would be the short opportunity once we see that retest, and we'll get into that. Looking at the financial sector, you know, again, the support line, slightly different view. Clearly it didn't take out the highs up there at 46.70, so the banking sector is starting to roll over now. Market force has given us an entry signal to go short, 2 to 3 bars on the market force to the downside. But again, you know, this is today's action. It's currently 3:13 in the afternoon. We'd expect to, I think, just let the weekend go and have a look at it early next Monday to see what does occur. So that's the financials. Looking at materials, materials section here, this is an inside day. you know, it could have been a dark cloud cover, but not. But it's certainly a bearish formation. You know, that is a reversal signal there and pushing down today. So materials broke through, overthrew the previous support, and have over the last 3 or 4 days begun to push down. The contrast to all of this, of course, is gold and silver. Let's have a look at silver to begin with, which is an extraordinary story. You know, this is the weekly chart, just straight vertical. My goodness, I mean, personally, from a trading perspective, terribly hard to have missed the start of this, because these resistance lines, which go way back, you know, to 2006, were ones that we expected to see respected, and in fact they broke down heavily, and then tracked around with this bullish hammer, and up it went and just blasted through the overhead resistance. And you know, so we could actually put a Fibonacci extension on that just for the sake of the exercise to see where it's likely to go, and that's the way we measure it. It looks very three-wavy, but my gracious, that is just vertical. Would it make it to $48? Well, let me tell you, if it does, it's going to go, what goes up has to come down. And you know, from an Elliott perspective, this is a terminal pattern. Go back to the weekly chart to see what it looks like. It certainly, you know, it's putting up a little doji, tiny little doji there, which doesn't mean anything given the severity of the uptrend. But at $42.20, $48 is potentially the target. We would expect a fourth wave correction somewhere here, third down to 4. Find support, the way we measure, where we look for support, about 40% of the time, or 35% of the time, fourth waves usually retrace somewhere in the order of 38%. So a little bit cluttered in here, but where that number 4 is there is at the 38.2% retracement. We'd expect to see a fourth wave support there, if not down at 50 at $34, and then come up for a brief takeout of the high. So is the high there at 48.12? Well, time will unravel that one, but certainly there's some bearish divergence occurring on the market force when you get these lower peaks here and the higher peak there, and higher price action but yet lower price action there. Clearly that's divergence. So you draw a line. I can do that for you to show you. You draw a line right here like that, and then we go up here and you draw a line there, and you can see that the divergence is occurring between that upward trend and the weakness displayed by the internal relative strength indicator and other moving averages that coexist within the market force. So at some stage, certainly that's at the towards the upper channel now. We might see a little spike up tonight and then a pullback. That would be the action for silver, which is really where the money's been at in comparison to gold. This is the weekly chart of gold. I mean, it's a great pattern as well. Stretch that out a bit further. You know, this is a bullish sign here. As it's pushing forward, we'd expect that upper boundary there to be tested, and you know, then we'd look for some downside. That's at you know, around the sort of 1500 to 1550 mark. And again, we can put on a Fibonacci extension and measure as well. I think we did last time. I'll look at that. You know, it's smack on the 61.8 now as an extension. That's the measurement of that. They're often ratios that are very nicely set, with 1577 being the upper boundary. But I doubt whether it would really overthrow much beyond a bit of a spike high, just like here. Spikes up, pulls back, and then you get the retracement. This chart hasn't been updated for a while. I presumed that was going to be the fifth wave, but in fact it wasn't, nor was that. So what we're looking at here is a 1, 2, 3, 4, and final leg up for fifth, one would presume, somewhere up around that sort of $15, $25 mark. And beyond that, I think really that's it. One interesting chart that's worth a look at is Amazon. I always like to get a gauge from Amazon as to whether or not the market is going to continue in terms of strength. And what we're seeing here is a very overlapping structure, which is correctional. So we've had our fifth wave up. There's 1, 2, up for 3, down for 4, complete at 5. And then it goes A, B, and C. Now, the key question for the market is whether or not this is a 1, 2, meaning that the third wave will come down. It's looking that way for sure. Classic overlapping topping formation occurring there now. So, at 190 odd US dollars, $181.82, in fact, US dollars. Very interesting to watch there. You can see volume down here is actually dropping away ever so slowly. The opportunity in the way that one would trade this is to say, all right, well, we get another day of confirmation, and you enter short with a tight stop either above the second wave, this one up here, so it's down A, B, C, and then this is the first, wave 2, and then down but it comes. So the stop would go in over the top here at sort of 191 or in fact $194 as an opportunity to trade that. That's a weekly chart, of course, so quickly look at the daily, get a better view or a different view, and there it is, sort of folding over there now. It takes a while for these things to unravel, but once they get going, they go with some pace. So what have I got left to show you? ERA is an interesting one. That was a short we recommended ages ago. You can see that it's broken through its major support level at $10, and only today pushed down heavily. I mean, that's it opened at what's that, $8.21 and $6.48. That is a massive decline in a day, percentage-wise. So not a good scenario there for the uranium exporters, as an indication of what is still ongoing in Japan. And you can see the classic channel that's been set up there, long-term short since late last year. All right, well, look, that's it. We'll update early next week. I expect that there'll be some tradable positions, and we'll talk to you then. Cheers.